You're listening to Slick Talk, the hospitality podcast, a podcast for those who are in and around the hospitality industry who love, live, and breathe what they do. You can join us for candid and unscripted conversations with hospitality experts and founders as we go deeper into their personal stories while they're sharing their triumphs and trials that got them to where they are today. I'm your host, Will Slickers, and you're listening to an episode of Slick Talk, the hospitality podcast. Now, let's begin. All right. Welcome back, Slick Talkers. We are back. I know I do this kind of intro a lot. I'm sorry, gotten used to it over 6 years, but I think this episode is going to be a very, very special episode for all of you. We're going to talk about hotels. We're going to talk about short-term rentals. We're going to talk about growing up in multiple countries and learning multiple cultures and so many other topics behind the scenes. I have an amazing guest named Franklin DeSere. Franklin, welcome. Such a good opportunity to see you virtually, even though we just got to hang out in person at our retreat. I'm very excited to have you on the podcast. Welcome to the show, my friend. How are you doing today?
No, thanks for having me. Excited to be on your pod. Doing good. It's been a little rainy in Austin in the Hill Country, and I think Texas is the only place where I actually am happy to see rain because it's so usually gone in the summer. So can't complain.
I love it. I was just on a phone call with someone earlier who's also in Austin, and she was like, "Yeah, it's actually kind of cooled down. You know, we got some rain. It's not blazing hot, so it's a good win." I would
Yeah, I
say for
think
you guys.
here we had a crazy amount of days above 100 degrees, which is just not enjoyable for anyone. And rain this year has
No,
allowed us to stay a little bit cooler. So no, it's definitely been nice.
I love it. Well, like I shared with the audience, you and I actually got to hang out in person at our Good Morning retreat in Auburn, Alabama. Got to go into traditional hospitality, and it was a lot of good fun. I hope you had a good time. I loved our conversation. You and I got to talk on the roof a little bit and kind of hear a little bit about your story, the French Cowboys who are, taking the industry by storm. So I would love for us to open up everything. I read, and you also told me this, but I read through your bio that you kind of grew up in Paris, but also did schooling in the US. So I'd love to discuss, certain kind of like upbringing and what that was like for you to one be in and then Paris and then the US and kind of the perspectives on business and hospitality that you had from your upbringing prior to launching Wilder Ways.
Sure. So I grew up a little bit of an unconventional match for my parents. My mom is from Louisville, Kentucky. Spent most of her childhood there before moving to California, where she went to school, and then eventually to Paris. I think she always had this dream that she wanted to move to Europe, move to Paris. It was originally supposed to be kind of like a short, couple years, and then she fell in love and basically never left. And then my dad is actually from the south of France, a town called Aix-en-Provence. It's a couple hours north of Marseille, just kind of the second biggest town in France in the south. And they met randomly, a little bit older. I think my dad was probably mid to late 30s. My mom was earlier in her 30s. And so they met, three siblings in my family. I have an older sister and a younger brother. And we really grew up with bicultural upbringing. My mom felt strongly about us having an American part to our upbringing. My dad also wanted us to have the French element. And so it was definitely interesting at the dinner table. Would speak English to my mom, French to my dad. Also went to a school that was bilingual. So half my classes were in French and half were in English. And so from a very early age, I'd say I was culturally confused. you know, my friends in France would all tell you that I'm American, and my friends in the US would tell you that I'm French. And the reality is somewhere in the middle. You end up feeling more French when you're in the US and more American when you're in France, just because you stand out a little bit more.
Mhm.
But yeah, so was in Paris through the end of high school, and then ended up moving to the US for college. Having done a majority of my education in Europe, felt to continue the dynamic of kind of splitting French and American upbringing, that doing university in the States made sense. And so I moved to Philly right after high school. Was there for 4 years doing a double degree between Penn and Wharton. Really, what that degree allowed you to do, and really what it set up people to do, was to go work in either investment banking, consulting, or private equity if you were a junior in my program and you weren't doing an internship at Goldman Sachs, it felt like you were kind of a failure. And so, yeah, pursued that path, ended up doing a couple internships, private equity, and then finance. Realized that wasn't for me. I think growing up in Europe, hospitality and enjoying life is such a big part of the culture, whether it's the arts, music, food, going out, drinking. It's a big part of the European community is enjoying the finer things in life. And so I think I was very fortunate to experience a lot of that. I mean, Paris and France in general have some of the best design and hospitality products and food and the best wines. And so that was definitely a big part of what drew me to hospitality. I always really enjoyed those things and also really enjoyed organizing experiences for people. From a young age, I was always the one organizing the night outs, the trips for my friends, and the different excursions that we did because I got pleasure from seeing people experience the things I've organized. So yeah, when we thought about starting our company with my good friend Dylan, who's also Franco-American, hence the name French Cowboys, who I'd met in university, and hospitality was something we both naturally gravitated towards. And so it just made a ton of sense to get into the hotel world and the STR world as well.
I love it. And I also saw, and you kind of talked to me a little bit before, but outside the private equity side, you actually got a little bit of experience with WeWork and understanding the real estate kind of piece. So tell me about your experience with WeWork. Was there any big, like, one, was it as crazy as they say it was in all the documentaries with Adam Newman and all that stuff? And then two, you know, any kind of takeaways that you applied to your business with Dylan from not only your upbringing and the hospitality side and experiences and wanting to enjoy the finer things of life, but kind of the real estate piece. All right, Slick Talkers, sorry to interrupt. As you know, great partners at Minute have sponsored this episode. They sponsor the show. So every episode is filled with amazing minutes. No pun intended. So if you don't know who Minute is or what they do, we see that we have a lot of new Slick Talkers out there in the world. So, one, thank you for tuning into the show. Every listen, every time you hit play means so much to me and to my team. So, thank you. But if you are new, Minute is an amazing noise detection device. Not only do they measure noise decibel levels inside of your vacation homes or your hotels, they actually can detect smoke. Not only that, if you're an outdoor kind of unique stay person or just have an amazing outdoor amenities for your guests from pools to hot tubs to cookout pads, all the stuff, they have an outdoor sensor that is specifically made for outdoor noise because I didn't know this, but noise outside and noise inside actually makes a difference. So you don't have to worry about constantly making sure, are people partying at your place? Are the cleaners there? Or like whatever, kind of issue might happen, you can get that peace of mind with Minute at your side. So as you grow, Minute will grow with you. They have an amazing team of support and they have an amazing technology from hardware and the software. When the two marry, it's just a beautiful combination. We use Minute in all of our vacation homes and hotels with our management company, and it's the best decision we've made because we are so dispersed and we are so spread out that having Minute just is a necessity for our operations. So get with Minute, go to the link in the show notes, let them know that Will from Slick Talk sent you. They'll give you a sweet deal. And of course, you know the drill. We're back to the episode, and I hope you enjoy.
Yeah, so I had done an internship in private equity real estate my junior year. It was really interesting. It was covering industrials in the Midwest. Wasn't exactly the sexiest asset class. And so I was actually planning to kind of continue down that path and return there after university finished. And I randomly connected with an old mentor and boss who I had worked with previously in Paris, who had at the time been named GM of WeWork for Europe. At the
Mm.
time, WeWork was definitely a growing company, but it was mostly US based. And basically gave him a call. I was actually about to take a job offer in New York. Gave him a call and he said, "Hey, listen, if you're interested in real estate, you seem to also have an entrepreneurial background and seem to be someone who would enjoy startups. You should take a look. Europe, WeWork is actually launching the European market. We're looking for someone on the finance side, on the finance real estate side to come help us out. You should connect with the head of real estate." This was, I think, 3 weeks before I graduated. Connected with him, really, really enjoyed our conversation, loved what kind of WeWork was putting together. It seemed like a really exciting company. So I kind of pivoted last minute and ended up going to go work on WeWork's real estate expansion team straight out of college. The headquarters in Europe was actually based in London. So I was actually in London for the first 2 years and then moved to Paris as they continued to grow. They built different hubs within Europe. And so I moved over to Paris. Yeah, I mean, in answer to your question, was WeWork as crazy as the show portrayed? It was 10 times crazier. And it was the most fun job I've ever had. And it was also one where I was very fortunate to be very early on in the European team. And so I was given a lot of responsibilities that I probably wouldn't have been given if I had been a junior person at a more established company. What my role was really twofold. One was to help them structure leases across Europe. So, when I joined, the London team was right before SoftBank invested. Once SoftBank gave Adam Newman, I think it was $3 or $4 billion, things changed very quickly. The expectations of growth were very high. And so we started out really just at first with a few spaces in London. I think the corporate team in London was probably 50 people when I joined. By the time I left, we were in most European countries you can name, had over 1,000 people based in Europe. And, we signed lease, we opened the French market, the Italian market, the Spanish market, the Russian market, German, other countries in the Nordics. We also looked at Belgium, Portugal. And so really was super fortunate, kind of moved over to all those markets, got a chance to speak to some really smart people who were the owners of these buildings, explaining what WeWork was doing different and would be interesting for us to partner with them. And then also had some experience on the real estate acquisition side because Adam Newman had raised a couple $1 billion from a Canadian fund to purchase some of the actual real estate. The idea being that WeWork was creating value by being a tenant, and that we also wanted to capture some of that value by owning some of the real estate. Was a fascinating experience. Even though WeWork ended up going through a Chapter 11 process, and ultimately, the vision that Adam had did play out, would do it all over again. I learned so much. I worked with some really smart people, and it kind of gave me a really good basis for financial underwriting and the basics of real estate. In terms of the learnings we applied, the very clear one for us was that when it came to structuring our company and how we wanted to finance it, we did not want to go down the venture capital route. We were kind of created that market in this, prop tech space that wasn't really prop tech, was more real estate. And what we saw is that the margins that you have in real estate are just not the same that in SaaS and in tech. And raising money from VCs usually leads you to make poor decisions. You end up building tech, even though that's not really where you create value as an operator. You grow too fast. And often, what we found is the way to make money is to pay a lot of attention to the details. And when you have hundreds of millions of dollars and you're growing really fast, you're foregoing that attention to detail because you're saying, hey, right now our margins are going to be so wide that it's okay if we overspend, at a couple different places because over time we can get more efficient and our margins are going to be so high that it'll all play out. In real estate, that doesn't work out. If you overpay 20% for a lease, probably never going to make money on that deal. So big learning for us was really we did not want to raise venture capital because we were very, clear on the fact that this was, on the management side, a hospitality management business, and on the real estate side, or a real estate play. Now that does make things more complicated because venture is the quote unquote easiest place to raise money because there's a lot of firms, there's a lot of people trying to deploy capital, and successes of the last 20 years have made people very interested in putting money behind venture deals. But we felt very strongly that the way to build this business sustainably would be to, you know, focus on profitability from the beginning and raise from more real estate investors as opposed to going down the VC route. So that was probably kind of one of the biggest learnings for both me and my business partner. And then, the corollary of that was one of the things we worked at fantastic was brand. And, every single person well, not every single person in the world, a lot of people knew about WeWork. It was kind of synonymous to Airbnb when it came to short-term rentals or Uber when it came to transport. When your name starts being used as a verb, usually means you run in that competition. And, WeWork definitely built a super strong brand. And I saw firsthand, when you have a really strong brand, it makes everything easier. It makes hiring easier. A lot of people want to come work for you. It makes customer acquisition easier. And in general is something that I'm very passionate about. And so seeing kind of how WeWork built this really strong culture and this amazing brand that people resonated with was definitely a very good learning for us. And, trying to emulate some of the positive aspects of the WeWork brand and how they were able to scale that in our business today.
I love it. And I'm very bullish on the prop co-opco type business model. I think, with COVID, with recent couple years post, the heights of COVID, right? The 2021, the last 6 months of 2020, where capital's flowing, people were raising like crazy. It just was a lot of positivity in the air with like, all right, let's grow, grow, grow. Like we finally got our time to shine as an industry for the vacation rental side. Hotels obviously were not happy because of you know lockdowns and all the other stuff. But that aside, I really got exposed to the kind of prop co-opco side later after seeing the amount of closures that went into Stay Alfred, Domio, Lyric, Front Desk, like the list goes on and on and on, especially for the urban side. Single family has really kind of pivoted towards the franchise model and kind of a couple other interesting similar models as well. But the prop co-opco one has been the one that I feel like the most convicted about in the best way because I think it does show security. You can kind of separate the two because I think you kind of do. You need to separate the real estate from the hospitality and the operations, but they need to be somewhat close together. So I don't know. I would love your thoughts on like how intentional that was. You said that that was a big learning from the WeWork situation, but how intentional was it to really have that be kind of the goal? You guys have acquired properties, you're not building them from the ground up. So there you have a process, and I'm just kind of always curious on people's intentionality of that right out the gate.
Yeah, I think, like most people who start businesses, when we started, we didn't have all the answers. And so, what we did is a lot of research, a lot of trial and error. Regarding the Propco OPCO model, we did come up with that structure. The big hotel operators, the Marriotts, the Hiltons went through that exact thought process 50 years ago. They used to be integrated, it used to be the same ownership group for the management and the real estate side. And then what they realized pretty quickly on was that these were two very different businesses with different risk profiles, different cash flows, different types of investors. And so, as we kind of started looking at how other people had structured it, it was very clear that separating the real estate and the management was what was going to make most sense. So, we followed, in the past of other people who had done this before in terms of, having two very separate sets of investors, returns, and then teams who kind of handle the day to day. And, the way that we kind of think about it is there is a lot of value to having both elements of the business because they both create value one for the other. The value of a management company is tied to the management contracts that they have, and in essence, to how nice their assets are. When you think about why you like the Ace Hotel or you like the Amman or you like Marriott, it's because that brand is synonymous with a product that you're comfortable with, and so it's very important that the management company operates assets that are in line with its branding. And by that same vein, as a real estate owner, a lot of the value that you have is, tied to the NOI that you have at the bottom of each month, and that is driven by good operators. And so there's a lot of synergies between both of those businesses, but they are very different in terms of how they operate. And so the way we structured our business is we essentially have Outpost Capital, which serves as the deal sponsor and the GP. Easiest way to think about it is it's kind of a traditional private equity structure where Outpost Capital serves as the deal sponsor. So we go out there, we'll source an opportunity, we'll come up with a concept and a thesis, we'll work to raise equity and debt, and then we will also serve as the asset manager. And then once the deal is capitalized, purchased, and we close on it, we have a programmatic partnership with our management company. Our hotel management company, actually, until very recently, was called Wilder Ways. We recently decided to rebrand it French Cowboys. We realized that people resonate more with that brand. And some of
Mhm.
the early success we've had on the PR side is really tied to the French Cowboys part of the story. So we're actually switching up that branding. But then, yeah, our company basically has a programmatic partnership with all the real estate entities that we buy. And what our management company does is operations, finance, sales, branding, all those things that go with a management company. Um, the reason we also decided to start the management company was twofold. One of them is, we were passionate about building a brand in a type of hospitality. And if you have a vision, it's easier to execute it on it yourself as opposed to find a third party management company who's going to really understand exactly what you want to do. And the
Mhm.
second thing is the types of assets that we're targeting are a little bit unconventional in that they're subscale and they're rural. And so
Yeah.
those are two constraints that means that most of the hotel operators that you know and come to mind aren't a good fit for those types of projects. They're used to having larger properties where you can staff more heavily, you can have a more traditional operating model. For what we were looking at, there just also weren't a lot of operators who were willing to take on, 30 key hotel 2 hours from Austin and operate at the level at which we wanted. Most of the operators in those markets are mom and pops who own the real estate, who run the day to day, but they don't have the level of sophistication that we were looking for as we scale this business.
Yeah. So much to unpack. So tell me, what does the portfolio look like today? Because I know when you and I first initially talked, yes, you're hotels, but you also have homes. So kind of walk me through the overall portfolio. I know you not only just buy the asset and then manage it, but you also help bring some life back into a lot of them because they're in tier two cities, and also the fact that, again, mom and pops were probably running it, and it wasn't probably the best upkept, updated type property. So love to know kind of like what the portfolio looks like today and kind of the overall, yeah, process after acquisition.
Sure. So today we've focused on density. Name of the game, in my opinion, for boutique hospitality is density so you can get operational leverage. Really, really hard if you buy, a standalone 30-room hotel 2 hours from Austin. Hiring the team that you're going to need in terms of general managers and directors of sales and directors of finance and branding and PR, a 30-room hotel can't support that. And that's why, most institutional guys will tell you sub 100 rooms, not really worth it. You can't make it work. Where we saw a different opportunity is to create density and to roll up a lot of these smaller hotels and then share resources across the board so that you can get those operational efficiencies, but you can still find values in these smaller deals that most big players won't look at. And so, really, what we've done over the last 3 years is if you draw a triangle between Austin, San Antonio, and Fredericksburg, that's where 95% of our properties are. We've deployed about $35 million dollars of capital, debt and equity over the last 3 years. And we've purchased 6 hotels, 8 vacation rentals, 2 pieces of lands where we were pursuing ground up development at some point, and then a historic post office where we're working on a restaurant concept. So we were fortunate as well in the way that we structured these deals. We chose not to go for the fund structure for a couple different reasons. When you go in a fund structure, you're essentially crossing your promotes across all the deals. So, you can do 10 deals, 9 go really well, and one goes horribly south. Essentially, your promote across the entire portfolio is really diminished. Now, it has its advantages and its drawbacks. If you raise a fund, you have all the money, you can deploy it, and it makes it easier to move quicker on the acquisition front. But we were able to find a good network of high net worth individuals and local community banks who liked our vision and our thesis and wanted to invest. And so the way we've structured it is each property that we buy is a different LLC with a different set of investors, a different lender. Obviously, there's a lot of crossover. A lot of our investors like investing across multiple deals. A lot of the investors in the real estate also invested in the management company and vice
Mm.
versa. And then we've also had some consistency. We don't have a different bank for every single deal. We have a few banks that have done a couple of our deals. But what we found there as well is that for these types of deals, big national lenders aren't the right fit. Bank of America or Chase is not going to be well equipped to finance or really have the appetite to do this. And so we work mostly with local community banks who have presence in these more rural markets, who understand them, and who can get comfortable behind our thesis. And then, yeah, in terms of how we've been phasing our acquisitions, we went on a pretty big buying spree for the first 2 years. What we really target is mismanaged assets that we think are distressed. So, our typical purchase profile is early on, we were doing smaller hotels, kind of like 15 to 25 rooms, mostly because of constraints of capital.
Yeah.
Some savings, but not nearly enough to do what we were hoping to do. And raising money with limited experience in real estate development and in hospitality management, was asking people to take a gamble on us. And so our first few deals were on the smaller side. As we've grown, we started taking on larger deals. So our latest hotel was closer to 50 rooms, 48 in a larger deal overall. And I think as we continue to scale, we'll be looking at larger opportunities. We're looking at a few projects right now that are in the 150 room range. Really, what we were focused on is diamonds in the rough that were not operated well, where we felt like we could create a ton of value with some pretty low hanging fruits. So typically the hotel is owned by an older couple who've been operating it, for 10, 20, 30 years. And there's really three, four things that we really like to see. One of them is poor distribution. So a lot of these people aren't listed on Expedia, Airbnb, Booking.com. Poor pricing strategy. You'd be surprised at the number of these owners will tell you, hey, I have one price from January 1st to December 31st because I know that's what guests are comfortable paying. And we've had our price for 10 years and we haven't moved it. And that just tells us that there's a ton of opportunity there because our markets in particular are quite seasonal. Rural
Mhm.
hospitality always tends to do better on weekends, but then there's also compression events and vacations and weather events that have a massive impact on demand. Um, and then typically website photography and marketing is also not up to par. The properties that we buy looks like the photos were sometimes taken on a Nokia, 20 years ago. And so that's really what we look for is these properties that we think have a ton of potential, but aren't being marketed or operated smartly. So the first element we look at is how much value we can create through the operation. So let's say the hotel is operating at 20% occupancy. We'll say, okay, with simple things like new linens, new photography, new websites, dynamic pricing, and listing on the OTAs, do we think we can bring this from 20 to 40? Is the market strong enough or the tailwinds of these local submarkets in the hill country strong enough that we can get there? And usually what we'll look at is we'll look at a competitive hotel nearby that's been renovated and has a more professional management company and say, what are they doing? And so that's the first area where we kind of look for value and how we look at our underwriting is what can we create just through the operation? The second part is what can we create through a renovation? And so that's really, looking at the guest demographic, what people are looking for, what higher end hotels are doing in the area, and understanding, okay, if we were to renovate all the rooms, add amenities, beach volleyball, pickleball, pool, add an F&B program, where do we think we could get this hotel to? So typically, if we can get comfortable that there's enough value in just the operations and that we can create additional value through the renovation, then we get to a point where we start negotiating with the owner. What's challenging with a lot of these owners is that they do not evaluate their properties on a cap rate or in the way that a lot of institutional buyers will look at it. A lot of the time, these owners will say, well, the financials say something, but this is a historic asset. You can't put a cap rate on the value of this asset or, oh, it hasn't done well, but a good operator could do a lot better. And so, I want to sell it for $15 million. And so, you know, there's a lot of tough conversations that need to happen there where we need to explain to owners, we're not buying this as a vanity project. We're not buying this just because we want to own it. We need to be able to create value through the renovation. And so, what we see is a wild spread in people's expectations of price. Some people will way underprice. Some of our best deals are people who just didn't know that they were setting on a property that had a ton of potentials. But then also
Mm.
we pass on a lot of deals where we're just like, hey, the numbers you're asking for are three times what we'd be willing to pay for this. And what anyone looking at this from a cap rate and more of an institutional point of view would be willing to pay.
Yeah.
So yeah, today, we've acquired this portfolio of $35 million worth of real estate. We've really focused on the operations part as first. And really right now we're in the middle of renovating all of them. We have a slightly different approach where we never shut down the hotel. So what we do is when we purchase in a hotel, because it's usually in desperate need of some tender love and care, we don't throw the French Cowboys brand on it immediately. We kind of white label manage it, focus on the operations, and then we'll shut down blocks of rooms. So, on a
Yeah.
50-room hotel, we'll renovate 15 rooms, then another 15, then another 15. What this allows us to do is to keep the hotel running. So, keep our staff employed, but also generate some cash flow for the property. And so we have a phased approach. And then really when the whole renovation is done is when we will add our management company, so French Cowboys, um, imprint on it. We don't name all of our hotels the same. We feel very strongly about independently branding them because we're more driven by the real estate strategy than by a particular type of product that needs to fit within a box. And also, more from a mission point of view, what we really wanted to do was to create accessible escapes around tier two cities. We feel like people spend way too much time behind their computers, behind their laptops and phones, and in cities. And we just wanted to create a product where we could make it easy for people to disconnect, to get away from their everyday lives. But people have different, budgets and price points that they're
Yeah.
looking for. And so we tried to, have a pretty wide range in our product mix of some places are better suited for groups. And one of them actually has a wedding venue on it. So it's better for weddings. One of them is going to be way more premium and it's for people who want a more premium experience. But we didn't want to be constrained by a price point or by a unit type, but rather try and find an opportunity that makes sense from a real estate point of view and then figure out how we're going to brand, market, and renovate it in a way that makes sense for that guest demographic.
All right, I'm back. Sorry to interrupt, but you have to hear about our partners and friends at Hostfully. Not only are they an amazing property management software, they're an amazing team. I've been friends and partners with Hostfully for over 4 years now, and it's been an amazing 4 years. I can't complain because as I continue to grow my business with our property management company, they continue to update and grow their products and features within the Hostfully platform, and it just gets better over time. So, with us, we have a unified inbox, we have amazing marketplace, not only for the rest of our tech stack to integrate, which is awesome because they work with so many people, but then the third piece is the distribution is built in. So you don't have to fully rely on a channel manager. You can actually rely on the amazing integrations that Hostly has with Airbnb, Verbo, booking.com, Marriott Homes and Villas, you name it. They have what you need in order to get your inventory, your properties to the right people. It's kind of a no-brainer, but I'm going to tell you this anyways. You're going to get a special deal with Hostfully with the link in the show notes. You'll just have to let them know if you love the product and then just tell them that we'll send you. So that way you can get that amazing Slick Talk deal. And of course, we're back to the episode. Thanks for tuning in. And I hope you enjoy. I was going to say, one comment, spoken like a true private equity guy. Find the value. Where can you deploy it? Where can you increase all that stuff? And then spoken like a true Frenchman. People work too much behind the computers too often. We need easy, accessible escapes. I think it's great. And there's a lot to unpack. And I can take you down a lot of different roads and directions here. But I am curious with your perspective on the distributed type of inventory. Not to bring up a famous phrase from the retreat, but in the sense of, having, like you said, it's really when you have a 30, 35 unit hotel, it's really hard to have a GM and a director of sales, and you just don't have the room inventory to really support that type of labor and that kind of payroll. So the fact that you're able to spread and share resources across these properties is really great. And I'm curious, just with the current talent pool there is, especially in tier two cities, how are you guys retaining and kind of upskilling and keeping the good team members across the portfolio when a lot of people are just struggling to find a good person for their 100 unit hotel? I would love to know your guys' perspective on talent and kind of the whole gamut of culture there.
Yeah, I mean, I think you hit the nail on the head there. It's all about people in hospitality, and the hardest part in hospitality, and really that for me touches both operations and construction, is that you're working with a lot of people who are on the bottom end of the pay scale, who have a huge impact on the overall experience that your guests have at your property. The backbone of a hospitality operation is housekeeping and repair and maintenance. And, these are our staff members who have very tough jobs. If you've ever cleaned a room, we have everyone in our company has to spend a day as part of onboarding, shadowing a housekeeper and going out there and spending time cleaning the rooms. And, the first hotel we bought, we didn't have any team. And so I served essentially as housekeeper, guest experience, bookkeeper, sales, repair and maintenance. Growing up in Paris, being handy was definitely not one of my strong skill sets. And so, I had to learn it. And after cleaning rooms at 100-degree heat, cleaning 8 rooms in a row and doing laundry, it definitely gives you a whole new appreciation for a lot of these tough jobs in hospitality. But so
Mhm.
yes, hiring has been a constant challenge, especially in the markets where we are, where the labor pool is even more limited than in a city like Austin. It's
Yeah.
a constant challenge. Add to that the fact that the properties that we buy, at first aren't very sexy. We're buying a
Mhm.
B that needs a ton of love or an inn. And so you don't have this element that can help with hiring, which is, oh, you're in a really cool and well designed hotel with a great operation, a big team. And so it's been a challenge. And, we definitely made a lot of hiring mistakes at first. Found people who weren't a good fit for what we're looking for and had to kind of turn things over. I think where we've had some success recently and where I've kind of changed my mindset is I used to be agnostic as to the types of people we would hire in terms of their background. And what I've realized is it's much easier to hire people with a hospitality background. No, hospitality
Yeah.
well, is a little bit unconventional. You work weekends, you work late nights. It's a job where, you don't get a lot of time off and you
Yeah.
you need to,
It's rough.
an emergency happens. If you get a flood or a fire in your hotel and your GM's on vacation, he's going to get a call.
Yeah.
Well, really looking for people who have a passion for hospitality and who have experience in that industry has been a big focus of ours because these are people who understand it. People who might have worked in tech company who moved to hospitality. It's completely different lifestyle and type of day to day. And then the second thing has been a lot of focus on team building. What's really hard for us too is we have a distributed model where we have teams that sit all over the place. We have monthly all hands, we have monthly happy hours. We do different happy hours in the Hill Country versus in Austin. Um, we also try to have a lot of our corporate team go out and work out of the hotels. One of the biggest pain points in larger organizations is this disconnects between the on-site team and the corporate team.
Yeah.
That can be a big issue where, your hotel GM is pulling their hair out because, they see so many things that need to happen, but then they're speaking to the corporate office, maybe sitting 5 hours away, who comes to the property once every 2 years and who don't really understand a lot of this. Works the other way too. The corporate team will be looking more at financials and sometimes see things that the on-site team may not see. And so, the way we've been able to bridge that gap is really enforcing a very regular process where our teams, at the properties come to the corporate office, spend time with us, really understand, who are the people who are sitting in this office, what are we working on, what are we looking at, and vice versa, making sure that our corporate teams spend time at the hotels, whether it's your director of finance, your director of sales, your director of branding, because they need to understand the day to day of these properties to be able to make good decisions. But yes, the reality is hiring is something I think we're always hiring. We probably always have 3 to 4 positions open. And I think it's just the reality of hospitality is it's a high turnover industry. A lot of people take these jobs when they're in between jobs or, move in between companies. And something that we're really focused on is trying to retain talent and to create a good bench where someone who starts as a housekeeper, front desk agent, or repair and maintenance, if they perform well, has a clear progression path and understands, hey, where can I be in a year's time, 2 years time, 3 years time, because that's what gets people really excited.
100%. And I'm curious, and not to plug the retreat, but did you learn anything from Horst Schulze's speech to all of us about, hiring and if the person wasn't a right fit, you're the Dumbo that hired him. So you should like look at like that. For me, I was like, no, no, I'm sure I'm not the one that's like making the mistakes here. But I would love to know your kind of perspective when it comes to the hire kind of piece of that.
Yeah, 100%. I think I take every person that we've had to hire who's either quit or who we've had to fire is a personal failure on my part. As the CEO of the management company, it's my responsibility to hire, onboard, train, and nurture talent. And when it doesn't work out, ultimately the buck stops with me. What we've done is we've tried to create a pretty rigorous hiring process where we have, values as a company that we're very strict on, and we evaluate candidates according to a scorecard that we have, where we essentially, we have different managers within the team interview each candidate, write up notes and reports on what we looked up, what we looked for, and made sure that there was a match between the key criteria that we had identified and the different candidates. Now, I'd be lying to you if I told you we had a perfect process. We still make mistakes and we will continue to make mistakes. But I'd say over the last year, the types of candidate, the success rate of the hires we've had has gone a lot higher. And I think that, has come through some tighter process management. But also, as you grow, it becomes a little bit easier to hire because, you have more projects, you have more legitimacy. When it was just me and Dylan hiring our first employee, it's really hard. You're like, hey, you have one hotel in the
Mhm.
country, you have three vacation rentals, you guys have no website, we had no office.
Yeah.
It's kind of harder now that we have a little bit larger portfolio and bigger teams, a little bit of PR. Those things make it easier because people can go on the website, play around, and understand kind of who we are. I think one of the things that was mentioned at the retreat was also very good onboarding. That's definitely an area where we're still working on to get better. But I think setting the tone from the get go on who you are as a company, what are the expectations, how we speak to each other. When you have a disagreement with a team member, with a boss, with an employee, how you're going to handle that. And I think that's something that we're continuing to focus on because if you get it right, you set yourself up for success. And if you don't spend the time doing it, you just pay for it later. So I think it's a constant kind of iterative process where you just hope to get better over time. I would say, in terms of the hospitality, what we've been more focused on is when we buy these hotels, they're hemorrhaging cash. And so we're really focused up front is like, hey, how can we increase revenue? How can we lower our cost per turn? How can we, just essentially stop the ship from sinking?
Mhm.
Now that we're in the middle of a renovation, a big focus for us will be how can we elevate the experience for our guests once these products are renovated? You know, Trying to really focus on building a hospitality brand and experience when you have a product that's not up to par, it's hard.
Yeah.
You can have the best front desk agent in the world. If the guest walks in, into the room and the bathtubs looks cold and the linens aren't nice and the room is outdated, they're not going to have a great experience.
You
Uh,
can only put makeup or lipstick on a pig so much until the end of the day, it's still a pig, right?
Exactly. And so now a big focus for us will be, hey, how can we essentially train our teams to elevate the way that they speak to guests? Something as simple as, when a team member walks by a guest at a property, how do we address them? Do they say hi? Do they say hello? Do they say good morning? Do they stop to talk to them? Do they just walk past them? And so there's a lot of these things that just need to be implemented. And that's a lot of what we're working through as we near the end of the renovation is how can we train our team and what type of hospitality do we want to offer?
Yeah. Do you feel like it gets easier with every property? I know they're all different, and like you said, one more premium experience, one more kind of a wedding venue type scenario. So I will take that into consideration. But do you feel like every time you guys get into a new property, a new real, building, new hotel, does it get easier? Does the growth in inventory actually help, or do you feel like sometimes it actually just adds on to the work and to kind of the hot mess of hospitality, right? Where it's never ending. So
Yeah, yes to both of your questions. Yes, it's still a mess because every hotel that you take on has its new set of issues, especially since we're buying properties that are on the older side. You know, every time you open up a wall or you dig up a pipe or you look at the electrical, every property is going to have a new surprise. Some are in way better condition, some are in way worse condition. We've had a lot of HVACs all die at the same time at one of our properties just because they were all at the end of our life cycle. So yes, there's always a heavy lift that happens up front. Now, it also got a lot easier because, when we first started, you don't know anything about anything. So, from picking your tech stack to drafting your budget, how you're going to be looking at your budgets, to figuring out who you're going to sell to figuring out how you're going to design and execute and sequence the renovation, to who's going to build your website, to who's going to do your social media marketing. And we made a ton of mistakes on our first project. We made a lot on our second. We made a little bit less on our third, a little bit less on our fourth, a little bit less on our fifth. And so we're definitely, everything's getting better. And I would say each new project that we do, I'd say we're getting 20 to 30% better across the board. We worked with a bunch of different agencies for building the website and for doing social media. And we kind of figured out what works best. And so you just get to find better and better partners who also have done multiple projects with you. So they also get more accustomed to your team. You build better processes. If we were to redo our first project today with the team and the knowledge that we have now, we would do it completely different and a lot better. And I think the reality is we're going to continue to get better. If ever I told you today I think we're as good as we could be, I would both be lying, but also I would also be at a point where I'd be like, okay, well, what's my role in this company if we've already done everything great? And so I think across every single department, we've gotten a lot better, and we're going to keep getting better because experience is golden. And the more projects you do, the more you iron out the mistakes and you understand what's going to make you successful.
I love that. Yeah, and kinda just yeah, what Horst even said at the end when Dan asked was like, "Did you ever feel like you accomplished your vision?" And he's like, "Yes, we accomplished our vision, but do I feel personally? No, I know there was mistakes happening. It was never perfect. You know, we didn't get into other ventures, we didn't get to airlines, we didn't get into other things. We there's so much room for more." And I think that's gonna be the case for a lot of us, for people listening, for you, for me, whether we exit or have a big acquisition or whatever the outcome is of our businesses. I think it's, you're going to have that moment of reflection. It may not be a week or a month or a year. It could be 10 years down the road. You're like,
Could have
man,
done.
yeah, remember that one moment, that one thing we could have just done that a little bit better. So I think, it's kind of good to know that if you accept that early on, you're setting yourself up for disappointment. But
Think
I,
most
I'm,
founders, you have to be a little bit of a psychopath to start a company. I think you have to wildly underestimate how difficult it's going to be and be unreasonably confident in your abilities. Otherwise, you never do it. And then you get slapped in the face regardless. But yes, I think I don't really envision a world where I'll ever be content with what we're built because
Mhm.
everything could be better from your F&B to your guest service to your branding to your events to new markets to new ventures. It's a never ending endeavor.
Yeah. 100%. Could not agree more. And, you'd mentioned a piece of your tech stack, just kind of going through that list earlier. And I am curious. I always love knowing because I asked you this on our pre chat was, do you see the future of hospitality being, and I hate this term, but like a hybrid model, right? Where operators no longer are just vacation rentals or just hotels, that they start hybriding the two inventory types as easy as it may sound to do the both. I know it's hard, especially when it comes to tech. So how did you guys actually go about your tech stack in order to support both inventory when one could be a single listing type, right? Where you have one room but times 10 multiple versus you have one home. There is no multiple behind it. You can't push that out to multiple channels. And there's a bunch of other stuff. So I would love to know just the way you guys approach your tech stack and the way your partnerships are with tech.
Yeah. So, circling back to one of the things I mentioned when we were first started the chat is because we didn't want to go down the venture route and we didn't want to pretend to be a tech company when we were really a real estate and hospitality company. We made the decision very early on that we weren't going to build any tech. We weren't going to hire engineers. And I feel like that was one of the better decisions we made. There's a lot of people out there with deep pockets who are exclusively focused on building software. We don't want to compete with those guys.
No thanks.
Cloud gets raised hundreds of millions of dollars and they're solely focused on this. That's not where I want to compete. What I want to do is I want to find the best tech stack and stitch it together so that it helps makes operations more efficient. And you have also a brand package for your guests that makes sense. And so we do have a different tech stack. So we manage about 100 vacation rentals today. We have a slightly different tech stack for our vacation rentals and for our hotels, but in the way they operate, they're pretty similar. So on the hotel side, we use Cloudbeds, which I think is the market leader. So raised hundreds of millions of dollars. Seems to be what's going to be the market leader in that space. They bought our guest messaging software, which was Whistle, which we use to automate a lot of the pre-arrival messages. But it's also we're big believers that in these subscale properties, you can't have staff, 24/7. Just doesn't make sense, especially if you're operating at 20% occupancy on a Tuesday. What we do want is when we want to be able to answer questions all the time. And so we've really pushed our guests to communicate with us through texts. And we do that using Whistle, which is now actually a part of Cloudbeds and integrated. We use Gusto for HR, pretty simple and easy to use platform that allows you to hire people, process payroll expenses, whether it be hourly employees or W-2 employees. And then on the vacation rental side, we use Guesty as our PMS. Guesty, yeah, similar to Cloudbeds, raised a bunch of money, seems to be the market leader. And then we kind of stitch everything together in the back end in our accounting with QuickBooks, which is where we run all of our books. We use Breezeway as well. Breezeway for the project management, kind of repair and maintenance and housekeeping part on the vacation rentals. And then a crazy amount of Google Sheets and Excels, of course, in the back end.
Yeah.
In terms of, where I see the space blending between vacation rentals and hotels, I think it's already started happening where there's a lot of properties that aren't really traditional hotels and aren't really traditional vacation rentals. If you think about a, 20 unit building in East Austin. I'm thinking of one that we manage right now, which has, was really set up for short-term rentals, easy access and signage, remote locks everywhere, a self-service laundry space, and then a common area. Is that a hotel or is that a vacation rental park? A lot of people traditionally think of hotels as full service, where you have F&B, room service, spa. But what's really happening is there's now this new class of hospitality assets, in the boutique space that, feel like a hotel where they have some amenities, they have some services, but not the full gamut that you would expect in a 300 room Marriott. And so the question is this a limited service hotel? Is it a vacation rental park with some staffing? Is it a boutique hotel? There's a million different ways to call them. What I think will happen is that distinction will continue to kind of blur. And what I think will happen is, a lot of good operators will be doing both vacation rentals and hotels. It's why we structured our business that way is, there is some difference in the experience. In vacation rentals, the way you deliver service is through really good communication, but it's virtual communication because you don't have someone on site with you the whole time. But it's still a form of hospitality. You can leave a bottle of wine, you can leave a handwritten note, you can leave snacks, you can pre-stock the fridge, you can arrange massages, chef service, transport. You just don't have someone in the unit, with the guest for the duration of their stay. But it's not so different from hotels. And so my personal hunch is that this will continue to converge. I think if I had to bet, I think that Guesty or Cloudbed will end up buying each other eventually and kind of merge that entire kind of PMS for boutique hospitality. And then I think we will start seeing more and more operators kind of follow what we've done, which is operate both boutique hotels and vacation rentals. Because again, if you can spread your corporate resources across more assets, if you can cross sell, both vacation rentals and hotels, and you can use your repair and maintenance and your housekeeping team to service a portfolio in the area. I see no reason why that wouldn't be a very viable strategy that a lot of operators are going to pursue.
Totally. Makes sense. You don't on the tech side, you look at Muse ever? No?
We looked at Muse. To,
Not that they're not a sponsor or anything of the show, but
still,
good friends, and I love the product compared to Cloudbeds. I've played with both, but would love to know
yeah,
what your thoughts were.
we we looked at Muse, but this was probably 3 years ago now.
Yeah, yeah, yeah.
And
A lot's changed
yeah,
on
and
both.
what happens with these PMSs too is that they're pretty sticky. Once you make your bed, switching up, is very complicated. Everything's integrated
Yeah.
again. So right now, I don't have any desire to switch any of our tech stack unless someone comes up with a crazy AI solution that solves all our problems. But yeah, a lot of these softwares are very sticky. So once you make your bed, same reason that a lot of these massive operators have these heritage and vintage softwares that make no sense, but they're just way too big and the cost of switching
Yeah,
is just too high. So they just stick with
yeah.
what they have.
Well, George, Tommy, Richard, Matt, anyone from the Muse team listening, you know what you need to accomplish now if you wanna win over, the French Cowboys. But no, I was always, very curious and, like, interesting for me just 'cause I do see that it's like, for me, I just don't get why there's so many differences in our tech, but I do at the same time being coming from the hotel world first and then to the short-term rental world, but they're very similar. So for me, it's always, yeah, kind of a curious question of like, all right, why'd you pick this tech stack?
Mhm.
What's the goal? But to kind of wrap this up, I want to know from the French Cowboy standpoint, from the management side. I know the capital piece for me, it's something I'm still learning. I've told the listeners many times with guests I've had on in the past that specifically are in the real estate or the capital side of the industry. It's not my cup of tea in the sense of I just never been exposed to it. I'm not in that world. I'm in very much an operator. So I'd love to know for your operation arm, would love to know what's your guys' goal for the next year? Do you have anything going into 2025? Are you trying to get into a certain guest promoter score or like what's your overall kind of dangling carrot right now?
Yeah, I say there's a few different goals that are very important. One of it is tied to financial performance. So we this year have been profitable, which was a big goal for us as a management company. We raised $1 million on a safe note to kind of scale the French Cowboys management company. And today, with our hotel inventory and our vacation rental inventory, we're able to be profitable. And so that was a big goal for us because we didn't want to go down the venture route. We didn't want to be fundraising every 18 months for that business. So that was, big goal for us is how can we get to a point where this business is self-sustaining and doesn't need cash injections to continue growing? So, continuing to focus on financial performance will obviously be a big area of focus for us and will continue to be moving forward. One other big part is the brand. Now that we're going to have these renovated assets, now that we have a creative director in house, a project manager in house, a branding agency, a website building agency, a marketing agency, it's starting to build our digital presence in a way that is going to be exciting to guests. So, it goes from everything to social media to websites, to podcasts as we're doing now, but just really starting to get our brand image out there so that guests know what we're building, potential partners as well, both on the investments, on hotel owners looking for operators, understand what we're building, and really look at us as a viable potential partner. So yeah, big focus will be on building out, the brand part, and with that comes, the guest experience side. How are you responding to guests? What kind of services are you offering? F&B is going to be a big area for us. All of these
Yeah,
hotels didn't have bars or didn't serve breakfast or lunch or snacks, and so as part of our renovations, we're building all those spaces. So that will obviously, be a huge lift as well, is to figure out the F&B piece. And then I'd say the third area is growth. So, both on the vacation rental and the hotel side, vacation rentals, we're continuing to grow our business there with third party management contracts. But we're also starting to explore partnerships on the hotel management side. So, we're speaking to a couple groups on the Texas coast, in West Texas, in the Hill Country, either owners of buildings, investors who want to do JVs and want to put together hotel projects and have us either redevelop it for them, co-invest, manage it for them. And so, say the short-term goal for the next 12 months is probably to really cement our presence in this market, do a couple other hotel projects, a little bit on the larger side, continue to grow the vacation rental, and really build out the hospitality and the brand while staying profitable. And then medium term and opportunistically as well, scaling this business and this brand nationally. We're
yeah.
starting to look at few new markets, speaking to a couple family offices and funds. Now that we have this proof of concept, that we've been able to build here, and see if we can identify other exciting markets where we can grow this vacation rental and hotel business.
I love it. Such a visionary, such a visionary. I like it. No, I get to meet Dylan, your business partner in New York. I think we talked about that at a previous retreat, and then getting to meet you and see the dynamic duo. I'm like, okay, this makes sense. Like, I get this partnership. I love what you guys are doing. I also love the rebrand. Sorry for calling you guys Wilder Ways in the
Oh,
beginning of this episode.
well, it's
Uh,
we're rebranding right now, so
okay,
you didn't get anything wrong. No, yeah, I think to what you were bringing up, and Dylan, if you're listening to this, um, I couldn't have done this, without my business partner. Starting a company is so hard. It's an
yeah,
emotional roller coaster. There's ups and there's downs, and having somebody who you can share the day to day with makes everything so much more fun. We're also fortunate where we were best friends before starting this company, and our friendship has only strengthened. We've done a fantastic job at both intertwining ourselves in the professional world, but also remaining extremely good friends, outside. We spend most of our weekends together. We're doing family Thanksgiving together with both of our families this year. So that's definitely been one of the things I'm most proud of, is maintaining a really strong relationship with your co-founder.
yeah,
Because the reality is, when you go, when things happen, even though you share a lot with your team and your investors, you can't share everything with your employees or with your investors. There's stuff that you need to kind of deal with, and
yeah.
having somebody who's on that same level as you, who you can be super transparent with, and share your worries and also share the things you're excited about, makes the
Mhm.
ride way more enjoyable. And I'm very aware as well that we have very complementary skill sets, and we wouldn't be where we are today without him. So,
Shout out to Dylan. You're the man. Love it. Well, okay. So, Franklin, I would love to give you a moment for the listeners that want to connect with you, whether they're interested in investing in the prop co, or if they're interested in connecting with you on management or anything like that. Would love to know what's the one place you would want people to go to connect. Whether it could be anything. We're gonna put everything in the show notes, but if you had one spot, where do you send them?
easiest is to either email me at franklin@frenchcowboys.com, find me on LinkedIn.
I can't believe you guys got that domain. That's an
Yeah.
incredible domain to be able to buy.
Yeah. Well, turns out not a lot of people are French Cowboys. So there's actually a funny story behind that, maybe for a separate podcast. But yeah, I think over email, over LinkedIn, on our website, both on the French Cowboys website. Well, right now the French Cowboys website is for our vacation rentals. It will soon be for our hotels, but there's contacts page there, and then we also have for our real estate page. It's called Outpost Capital. The
Mm,
website is outpostcapital.co. We also have a contact us form there, so we're pretty easy to find across the board, and we monitor all this stuff easily. So anywhere is a viable place.
awesome. Well, A, thank you for being on the show. B, can't wait to have you back in the future to see the growth and to see what you guys have done with the brand. Something I love to geek out about. So would love to have you back in the future. And then C, for the listeners, check him out. Follow, like, subscribe, all things French Cowboys. Give them the support that you give the show. And Franklin, thank you so much for being on the podcast today. Really appreciate
Well,
it.
thanks a lot for having me, Will. This was really interesting, and always love chatting about this stuff. Always fun to chat with also someone who's passionate about what he does and about our space. And really enjoyed this. Look forward to doing another one.
I love it. Well, you heard it here first, Slick Talkers. Make sure to like and subscribe to all things the French Cowboys. Go to their website, show them love. And like always, you know the deal and you know the drill. See you guys again next week. Thank you so much for listening, and thank you to our show partners for making Slick Talk, the hospitality podcast, possible. We hope you enjoyed the show, and we would love to connect with you outside of the podcast. So you can follow us on all of our social media channels for daily hospitality content, or find us on slicktalkthepodcast.com. And don't forget to rate, review, and subscribe so you never miss an episode. I'm your host, Will Slickers, and we will see you guys all again next week.